Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos up daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date Okay, so hi everyone, hope you guys are all having a great day today. And in today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos up daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date information. And if you want to be notified when I do upload them, consider following, subscribing, so be notified when I do upload those videos. Now, before we get to the analysis portion, I'm going to go over the economic calendar. And for Friday, September 13th, 2024, at 8:30 a.m., we have import price index, as well as import price index minus fuel. And at 10 a.m., we have consumer sentiment preliminary for September. One thing to note, on Wednesday, September 18th, 2024, we have at 2 p.m., we have FOMC interest rate decision. So the Fed most likely is going to be cutting 25 basis points for the interest rate, as opposed to the 50. There's a slight chance, but based off Jerome Powell's last speech, was most likely indicating towards 25 basis points from what he stated. And the market was kind of optimistic that potentially we might see 50 basis points, but based off latest inflation data and so on and so forth, about roughly somewhere between 80 to 85% of the market is expecting a 25 basis points rate cut. So that's basically essentially baked in. And mind you, at 2:30 p.m. on the Wednesday, September 18th, 2024, after the interest rate decision comes out at 2:30 p.m., Fed Chair Jerome Powell has a press conference. So be mindful of that. Now, in terms of the levels, so far, the tech sectors are somewhat moving up. I wouldn't say too much necessarily for Thursday's trading day, but on the Wednesday's trading day, for example, we saw Nvidia, which is mega cap stock, move 8 to 9% up in the positive territory. Now, in terms of overall movement, it looks like we're going to be testing the all-time highs. And in a way, there's three levels for the Nasdaq, S&P, and Dow Jones. If we hit them somewhat simultaneously, and I don't see us passing them, in my opinion, I might take a risk to short the market. But indications are pointing to the upside, mind you. By the way, this is all just my opinion. Please do your own due diligence and research before buying and selling. And what I'm going to show you guys is basically a mix of MACD lines, targets in terms of higher levels, and 2010 upward trend resistance levels, and so on and so forth, because they might be meeting at the same time. And if they do, and I see some resistance, again, I personally might take a small position in terms of shorting the market if I see some kind of resistance where it's not passing it. And I'm going to show you what I'm talking about. So, for example, SPY ETF for the S&P 500 closed at $559.09. And this is the all-time highs zone, right? So if I zoom out, you'll see the market, we're in the all-time high zone. If I zoom into a 3-month chart, you can see the all-time highs back in July of 2024, and then some breakouts during the pre-markets after hours. And then back in August and September, we came back and tested it, and then pre-market and after hours as well spiked up. And the question is, are we going to pass it this time around? Now, I'm going to go over the Nasdaq as well in terms of the level that I'm looking at in terms of the target zone, and then the Dow Jones, and I'm going to show you as to why technically potentially it will break these levels because of the MACD lines and technically the momentum of the market, if depending on what Jerome Powell states on his conference. And then I'm going to go into specific levels, not specific levels, but in terms of the play overall, in my opinion, that could be happening within the next few trading days. So now for Nasdaq, the level I'm looking at, I'm going to be looking at ETF QQQ, which is the ETF for Nasdaq. Same thing, just different ratio. Closed at $473.22. And the level I'm looking at, so basically we are almost in the all-time high zone. And the reason I say almost in the all-time highs, well, we are in the all-time high zone, but not necessarily exactly like the S&P. So back in July, back in July, this was the all-time high. So you could see, well, all-time high hypothetically zone. But in July, this was the all-time high. And for the S&P, we would basically, if we were pretty much similar, we'd be a little bit closer to it as opposed to where we're at right now at the $473.22. But I think what's going to cause issues in terms of in sync with the S&P and the Dow Jones. The Dow Jones is at the all-time highs, by the way, too. So same thing as S&P, is this upward trend resistance line dating back since 2010. So if I zoom out right about here, there's an upward trend resistance line dating back since 2010. Mind you, the market was still going up. It's just every time I went up to it, it got knocked down within the upward trend resistance line. Did break through in 2020 to 2022. And by the way, like for example, this upward trend resist line dating back since 2010, it's there's multiple examples as to like this is clearly a resistance line, multiple examples. And again, like I said, it broke through since 2020 to 2022, came back underneath, and we've seen it test the 2010 level once again. And this latest one was back in sometime in March of 2024. It extended a little bit, maybe some months before or after. Then we do break through it again, causing that July of 2024, which is this year, the high. And then here's the upward trend resistance line. We came back underneath it, by the way, again, with the upward trend resistance line of 2010. And we tested it once again and could not pass it. So here was the test again, 2010 recent of August 2024. And then we came down with the same thing with the market, S&P and Dow Jones. And now we're going to be testing it. So in my opinion, in terms of the levels I'm looking at as resistance and potentially the market could be coming down, which again, in my opinion, I'm taking a risk because it's technically the markets are pointing to the upside. And then catalysts could be pulling up in terms of the Fed, for example, if they somehow do 50 basis points, could be a good amount of momentum to break through, for example, the S&P 500 all-time high zone, and then the Nasdaq 2010 upward trend resistance line zone, and then the Dow Jones as well as the all-time highs I'm going to show soon. So those could be adding up in terms of catalysts, and then plus the mega cap stocks in terms of Nvidia or Tesla. And Tesla, by the way, soon will be giving out their shipment numbers in terms of vehicles that got shipped out and sold. So that, if it's major, could be a catalyst as well, and Tesla's mega cap stock too. So it is a risk to technically short the market if the zones get hit and we see resistance, and then you're expecting a pullback, but the pullback doesn't happen and it just shoots up, right? Potentially. Or we could get a small false breakout within a certain amount of time, but this was a long time. For example, this was a breakout of the upward trend resistance line from all the way from June 12th of 2024 all the way down to July 24th, 2024. So quite some time, a little over a month, and then we came back underneath. So just because we break through doesn't mean we might not get pulled down. But then back in 2020 to 2022, there was a 2-year period of breaking through the upward trend resistance line. So be mindful of that, right? So if they all hit them in sync, for example, the Nasdaq in this zone, which is roughly, by the way, again, we closed at $473.22. And then this, if we're hitting this zone, again, the longer we take, the higher the high will be. But in essence, give or take about $487 to $488. So if we hit that zone and then see resistance, and then if everything hits correctly, it might be a good idea maybe to take a small risk to short the markets potentially, then, because you would expect potentially a pullback. But again, it is a risk. I want to make that clear. Now for the Dow Jones, and actually one thing I want to show for the S&P as well, even though we're all-time highs, we do have quite a bit of room. Let me just zoom out for a sec. It's the same thing as for the Nasdaq, but this for the S&P. We have an upward trend resistance line as well for the S&P dating back since 2010. And same thing, every time it went up, it got knocked down, went up, got knocked down. The same consolidation up period, almost basically as the Nasdaq. The only difference is for the S&P, we did not necessarily break through quite significantly as the Nasdaq. So the S&P pretty much always stayed underneath the upward trend resistance line. And then the one thing I want to point out is we do have technically room to grow for the S&P to the upside. Now, there's been periods that we were in the mid zone and got pulled down, right? Regardless of being enough room to go to the upside. But just be mindful where we're at, and technically there is still more room to grow, technically, right? And now for the Dow Jones, it's the same thing as the S&P in terms of the all-time high zone. So you can see we're at the all-time high zone. And if I zoom in closer to 3 months, right about here, this was back in July of 2024. So the whole entire market, Nasdaq, S&P, and Dow Jones, they all created an all-time high back in July of 2024. And then we did test it again in August to September timeframe, give or take, of 2024. Did break through for the Dow Jones. So we did break through actually, but we got pulled down just like the rest of the market. And now we're potentially testing it again, once again, or moving at least towards it. So we closed at 41,096 points, give or take. And if we were to hit this zone right about here, you're looking at somewhere, actually, personally, I would go to this zone, because even though this was the previous all-time highs, we did spike up past it. So you could look at two levels, either 41,440 points, give or take, or about 41,585 points. But just to be clear, like to be cautious, I would probably do 41,600 points, give or take. So if we hit all of these three at the same time, in terms of Dow Jones, the high, the S&P, the high, which, by the way, I might have not mentioned the S&P one, for the ETF SPY, closed at $559.09. But then the high zone, you're looking at $563 and some change. But then the pre-markets and all that stuff, it goes up to $565 and some change. So be mindful of that, and there's a chance it could go to 565 and some change. So for the S&P or ETF SPY, 565 and some change. Dow Jones basically 41,600 points. And for the Nasdaq ETF QQQ, I'm looking at basically $488. If all three of them are pretty much within those zones that I mentioned, and they're having difficulties to pass, and I see that, for example, the Fed, in terms of the way Jerome Powell speaks, is not necessarily ideal for the market, then there's a chance that I'm expecting a pullback and I might be shorting the market again. This is a risk. The reason why I'm also saying it a risk, if the market is optimistic from what Jerome Powell states in the mega cap stocks, and in combination with the MACD lines, what they show. So for example, I'm going to be, all three of them are showing the same thing: SPY, Nasdaq, and Dow Jones. They all pretty much reversed on the MACD lines for the most part. So here's the MACD line, indicates if we're in bearish or bullish movement. Right now, it is in the bearish movement. So it's not guaranteed it's going to, just to make sure I said bearish, but it's not guaranteed it's going to go in the bullish movement. It looks like it's going to be crossing over. There's a good chance, technically it will. And if that is the case, it would break through the levels that I mentioned, and the market should have no issues, and not no issues, but like the pullback won't be so dramatic in my opinion. But if it does get pulled back and this reverses the downside, then you could be making some decent money. But essentially, this MACD line looks like it's going to cross over to a bullish movement, indicating potentially further upside, potentially, right? And then the 5-year chart as well, that was a 1-year chart previously. 5-year chart, it looks like it's trying to cross over as well. Previously, it was a light shade of red as well, but it's more curving up a little bit. And then the all chart, there's no slowdown to drop down essentially. And then for Nasdaq, it's a little bit more closer to crossing over. So here's the 1-year chart. Again, this one is more closer as versus the S&P to cross over to a bullish movement. The 5-year chart essentially is the same thing as the S&P for the most part, and the all chart is almost basically essentially the same thing. Now for the Dow Jones, it's a mix of both almost, I would say. For the 1-year chart, it's pretty close to the S&P where it could potentially cross over to the bullish movement. 5-year chart reversing up to the upside. So pretty impressive stuff right about here. And it turned to a solid green too, not even just upticked a little bit more. It actually turned to a solid green. And then the alt chart, it looks like there's no real slowdown in my opinion, full throttle, but anything's possible, but it still doesn't seem like it's going to curve down. If anything, it looks like it's about to curve up even more. So there's that. Now, with combinations of all those, it's pretty much a coin toss. But again, those levels are significant in my opinion in terms of Dow Jones and S&P being all-time highs, and then the Nasdaq hitting a upward trend resistance line dating back since 2010, which mind you has passed it in the past before, back in 2022. So it's not like it can't, but there's a good chance that these MACD lines indications for upside could be a fake out potentially. And if that's the case, I'm personally taking a risk for it, right? So that's my opinion. But again, hypothetically, what you should be expecting based off the data points is all-time highs will be tested, and hypothetically they'll be broken. Hypothetically, because again, the Fed, mega cap stocks seem like they're going to be bouncing back up potentially, and then the MACD line's pointing for more upside. So yeah, that's basically it. If you found it beneficial and you like this video, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I do upload my next video, consider following and subscribing so you be notified when I do upload them. And thanks again for watching. I appreciate it. Take care. God bless and peace.